Well, I want to welcome you guys to another How Money Moves in the Community conversation. Today we have on the call Diane Michaels, who is from Rantoul, Illinois. She is a former banker of one of our banks that we had in Rantoul. And I wanted to invite her on because she had a lot of information just in the banking industry for a number of years. And she's served on different committees and boards. And so she brings a wealth of information when it comes to really how we look at credit. And then I have Angie Curry-Lock on the call. She is the interim CEO, or not CEO, Chief Human Resource Officer and Diversity Officer. Is that correct? And I wanted her to come on because she brings a different perspective, maybe not so much of how a credit score is, but just how it maybe relates to the employee world, the way that it impacts our world when we're looking at different jobs, because we all know that there are different security levels or expectations and job responsibilities. And so credit makes a difference when we're looking at credit worthiness or trustworthiness, being able to manage higher secured functions in a job. So I really wanted to bring in that different perspective from a human resource world and looking at it. And we have Cindy Hicks, one of our board members, who has a unique experience of learning about all the different credit scores there are because she recently purchased her house in, it was what, 20, is it close to 20 years or it's been a while?
Yeah.
Yeah. So she was learning some things that were, new since it had been a moment of buying a home. So I just wanted to say thank you all for coming today. The Carter Education and Community Foundation is about closing the wealth achievement gap. And the best way for us to do that is making sure that we just bring knowledge to the conversation and into the community. So I am going to let Cindy kind of take it away. I know that she had some questions as she was learning about this. And we're just gonna, kind of keep it very casual. So
Thanks,
Cindy?
Tanya. So, credit's so important, and I think it gets discounted a lot. If you have great credit, you don't worry about it. If you have bad credit, you often struggle with shame or feelings of guilt or inadequacy over your credit. So when we decided to have this conversation, I thought, this is such a great topic because it really impacts every aspect of your life. And what Tanya was referencing is when I bought a home recently, I'm pretty passionate about credit. I'm very aware of my credit score. But what I didn't know is that there are like 15 different versions of credit scores, and even more beyond that. There's a FICO score, and FICO has multiple scores, but then also every credit bureau, every credit agency, even every creditor can kind of have their own score. And that's what started this conversation, because if you go to if you go to the car lot and you run a credit report, and it could be a specific number, then you go to your bank and get a credit report, it could be a very different number. And so I thought, we need to understand that. We need to understand why that happens, and how you cultivate good scores on all of the different, there are really two primary, but all of the different credit scores that you might have. So maybe with a history in banking, Diane, if you could kind of give our listeners an idea of how they cultivate a good credit score, maybe what goes into the two primary credit scores, and how they can find out what each individual score is.
Thank you, ladies. It's great being here tonight with you. A lot of things go into it. First off, I definitely know that it's difficult because what you said was one time it's an auto, the next time it's a home, the next it's a credit card, or it could be a student loan. Everything is weighted differently, and there are 15 to 21 different types of scores depending on who you go to. Banks notoriously are very conservative, so they're going to expect your score to be in the mid to upper 700s to look at. However, some of the other companies, credit companies and things like that, they're more apt to take a risk. Now, taking that risk, they will charge you more interest, but you have an opportunity to at least get some credit established. And sometimes the most important thing is just saying, okay, I've got to start somewhere, and let me start here with the guy that's going to charge me double-digit interest, but I'm going to pay him on time. If I pay even $10 or $20 more a month, you'll pay it off quicker, and you end up not paying that rate because you decrease the amount that you owe them. Therefore, you're not paying them as much interest as what you're quoted if you would only make the minimum payment. The different types are very difficult to understand, and you're right. It's either FICO or Vantage are the two big ones that they use in the industry. Things that are very important that could affect your score is how well you pay. You've got to pay on time. If you're not able to pay on time, the first thing you do is go back to that person and say, hey, look, I'm struggling. Many of the institutions, and I know even the banks, will do an extension. They might say, okay, you've got to pay the interest, but we'll pay principal later. So it doesn't hurt your credit score. Or they say, okay, well, we'll refinance, we'll redo the loan so the payments match up with what your income is, because everybody's income's been pretty tough this last year and a half. You're not making what you used to make, or if you are, there's other things that have come up that you have to spend your money on. So one thing you want to do is make sure you protect the payments that you're making. Going back and talking to somebody to make sure you let them know before they send you that, hey, you owe me an extra $30 because you paid late this month. That hurts. It also takes into account the amount that you borrow. Sometimes when you borrow a larger amount versus a smaller amount, that will make a difference at what the rate is, what the payments are, and what the collateral, which maybe you use a car, maybe you use just your signature, which are just on your name only, which tends to have a little more risk. So they're going to charge you a little more interest because there's a little more risk to that. How long you have had credit before, that goes into what somebody's going to charge you or what your score will look like. If you've had good credit in the past, you're going to have a great score. If you had something iffy, maybe not so much. And then the other thing that's important with this is look at the kind of credit, the kind of things that you're borrowing for. Are you borrowing for your house, your car? Did you get a credit card for incidentals? Nowadays, something that people forget, Mediacom, power, water, phones, they're now reporting, your utilities reporting on your credit. So you want to keep those on time too, because those also can affect your score. Those are kind of the top items, if you will, to look at for that. Hope I didn't forget anything.
No, I think you did good.
Okay.
Yeah, those are great answers. And all things that people need to think about and understand, and especially young people, because, sometimes when you're young, you have to make decisions about what gets paid, and knowing fully the impact of what you choose can make a huge difference.
One of the things that I might be jumping the gun here a little bit, but one of the things that I've always told my clients or customers, they're like, oh gosh, I got this great tax refund, which, we're coming around the corner that people are going to be filing their taxes and they're going to want that money in January, or as soon as they get their W-2s and things of that nature. Is if they pay a little bit extra, everybody, you don't get rid of anything. Pay somebody off, spend some money, because if you don't spend it, you don't feel like you've been able to take advantage of that check that you see that you're getting back. You've got to spend a little bit, but pay one off, and you're going to feel so much better than if you still have 5 with balances. Yeah, you have 4. So that always has been something in my mind too, is to make you feel like you're making headway. Because when you do get behind, or you do have a rough patch in the road with your finances, man, it's hard to come out of that. And it's a lot easier to talk to 1 or 2 people, 3, 4, than 5 or 6.
Mm-hmm.
Right.
If I may, Tanya,
Absolutely.
both ladies shared, life's going to happen, right? And when life happens, one of the first things that people typically do is that they say, okay, I'll just pay a little less, or I'll delay making this payment. And that's one of the worst things to do. I think we also need to be mindful of, even before we enter into that contract and get that credit card, right? It's there are a lot of, oh my goodness, look, 0 APR, or there are all of these kind of gadget, or you get 20,000 travel miles if you get this credit card, or whatever it is. It's just remembering that you've got to be able, yourself. Are you responsible enough to then make those payments? And it's okay if not right now is the answer. I think people just need to get comfortable and know themselves well enough to not fall into some of those traps that look, what is it? What did your mom used to say? If it's too good to be true, it may. So just being careful. Yeah.
Absolutely. We have a comment that says there are so many factors involved today when it used to be just pay your creditors on time. And so, yeah, that very basic thing of getting to know yourself and knowing what your responsibilities are so that you do make those payments on, to your creditors on time. It's just those are really important life lessons that we have to think about.
Angie, you're right. People have to separate a need from a want. Is this your everyday living expense that you're trying to take care of? Or is this something that maybe you could put off and say, don't get that extra coffee, or don't go out to eat this week, wait and go next week. Those little $5 and $10 items add up for you to be able to have a nice down payment, or have a little bit of money for that extra thing that you may want, not necessarily need.
Mm-hmm.
Yeah, I think, just determining needs and wants. I mean, that's just the basics. And that's a hard thing to do when now everything is instant gratification. And so credit may or may not be on the front end. Like you said, utilities, you're just doing it, and you're thinking, okay, I don't see the consequences of this is kind of a need and want, and no, it's a need or a want, not what you blend it into. So yeah.
Tanya, a consequence though of not being good as relates to your credit is that you may not even be able to turn that utility on, right? You may not be able to qualify to rent, to buy that cell phone. And so I think people underestimate. They hear credit score, but sometimes I have 3 young adults, and when they had to buy their own cell phone, which was a good thing for me, but it was like, wait, Mom, they pulled my credit, they checked my credit. Well, absolutely, right? Because they are giving you something on loan, you haven't paid it off. They want to make sure that you're credit worthy, and so I think we underestimate the things that a credit score, good or bad, either what we benefit from or not. So it's I'm glad that, and I'm sorry, I should have started by saying thank you for the opportunity, because this is a great topic, right? This is a topic that I think people underestimate and don't, and sometimes it's just we don't understand it. But so much, especially for those who are aspiring to buy their first home, to purchase their first car, so much is impacted by decisions that you could make when you're in college, right? That then it's very difficult to dig out of that hole.
I just want to share just a quick funny story. It's about identity, but credit and worthiness. When I moved back from college and I was getting my own place in Rantoul, and I went to turn on, my utilities, and I, said my name, and I, filled it out, and she was like, you have an outstanding bill. And I'm like, no, I've, this is my first time. It was actually my first time getting my own apartment outside of college. And she was like, no, you owe like $2,000. And I'm like, no, I don't. And so she was like, yes. And so thankfully, the blessing of being in a town where people know who you are, and someone came up and said, oh no, that's not the same LaTanya Carter. And I was like, thank goodness. But she had racked up quite a bunch of debt and different between our hometown Rantoul and Champaign. And so there were many times where I had to just prove that I'm not her. because she was just a not very credit-worthy person. So yeah, but it was, you know, all
That brings up a really good point too, because one of the things that you have the ability to do for free is check your credit. There are so many things with not just identity theft. Somebody could type in the wrong spelling of your name or accidentally put your address instead of somebody else's address. I mean, there could be 500 John Smiths. I mean, you know, as an example, nowadays, there are a lot of unique names, but there's a unique way to spell it too. My grandchildren have unique names too, and it's like, make sure they spell it right, make sure they've got the right address and the right numbers, because what happens is these companies don't go back and fix an error. You have to tell them to fix it. And then the one thing that I've always found out is if you don't go back to the company that made the error or back to the credit company and show them, hey, look, I've turned in this dispute and it should be corrected, it won't get fixed. And it could take 3 months, it could take 6 months, whatever, but it will always be on your record if you don't take that initiative to fix it yourself. That is so hard nowadays to stay on top of. And it does make a difference when you go to do something.
Absolutely.
And
Absolutely.
Tanya, I'm going to chime in and say, because your story also touches on identity theft, and we had a comment about identity theft, and she said identity theft protection is as important as asset protection, and it absolutely is. I will also say that another thing that you could do for free is you can lock your credit report. You can connect with every credit bureau, and you actually just let them know that you would like to lock your credit report. And then you can unlock it when you need, and you can do it all online. You don't have to talk to anybody anymore. And you can unlock it for a day, a week, a month when you need to access your credit. And that goes a really long way to protecting your identity from identity theft and protecting your credit from things like you're talking about, where there's a mistake, there's a minor mistake, and it's not necessarily you, but it's pinging your credit. If your credit score is locked, it's much harder for someone to accidentally pull the wrong credit report and connect your credit worthiness with another person.
You know, and I hate to keep interjecting here, but now in my mind is just racing and racing and racing.
No, go right ahead.
Because we locked my mom's credit. And we're sitting here and we're thinking of the younger generation and things like that, but we're taking care of our parents sometimes, or we're taking care of a sibling, or maybe we're the oldest sister or brother or auntie or somebody that's taking care of somebody else, either older or younger, that we need to watch out for them. Because that happened. We locked her credit down because somebody was using her name to get it, because generally older people have established credit. And normally back in the day, they were not going to miss a payment no matter what. So it's looking out for your family too. And a lot of us are responsible for many of our family members, whether younger or older. And credit is great.
Absolutely. I agree. I kind of want to just switch gears just a little bit. I will read this comment. Miss Elena said that she locked her elderly mother's credit because she gave her social security number to a scammer. And so that kind of leads into, again, we talk about our identity, and people just, it's just different time. I think, people are stressed and they're just trying to, good, bad, or indifferent, get by, but some people are not making wise decisions, and they really are just looking for the quickest way to stay above the water. So yeah, definitely, there are a number of scammers out there who want your number, and so giving your number over the phone is not a good thing to do. And it's hard because you just don't know who you can trust. But I want to kind of switch gears, like I said, to talking a little bit about the employment world and looking at, getting a job and, if we're thinking about young people, but also switching careers and finding a new job where your credit, they're running your credit, but how are they running your credit? What are they looking at? Because they're not necessarily looking at the number like we're looking at, but what are some things would an employer be able to, look at? What are they looking at? Angie, you and I kind of talked a little bit about this, or how this gets used and things like that. So if you don't mind, Angie, kind of just sharing what we talked about a little bit the other day, and then by all means, Diane, please feel free to jump in. This is like us just talking in the same room.
It's just us talking. So the good news is that a lot of employers stopped asking and pulling and running credit reports for a number of reasons. I personally believe that someone's credit score is not indicative of the quality of the work and their ability to perform a job. But there are a lot of things that could go wrong. I mentioned earlier, right? Life could happen that could result in you falling behind on bills. All it takes is one serious illness, or, just pick something that could result in you having a negative or a poor credit score. And so many employers have decided that, we're not going to check credit scores. However, this is a big asterisk, right? There are certain roles where it is important, right? If you're going to be touching money, I work for a financial services organization. If you're going to be in the wire room, for example, if you are going to be in a role where you have to have a security clearance, right? A lot of government agencies, I originally was in the Washington, D.C. area after Illinois, a lot of government agencies, a lot of government contractors. And so they're going to pull your credit. Again, it depends on the type of role that you're looking at. Sometimes first jobs are working at a McDonald's, a Wendy's, a Burger King as a cashier. Again, typically those types of roles where you're touching money, there will be many employers look to pull credit. That was kind of a long way of answering your question, Tanya. But and it's interesting because I actually had to go back and double check with our recruiting arm just to say, what do we do? And I was told, I guess back in 2019, there was some legislature that was passed where several states just said, what, we are not going to, basically we're going to make it illegal to pull credit reports. Now, that being said, all those other things we've talked about are still important, right? So while you may not need to have a great credit score to work at Freddie Mac, which is where I work, it's still, all these other life things that we need and want, in many cases, hinge on that credit score. One of the other things we talked about, Tanya, was when kids go away to college, it's almost like the credit card companies see them coming, right? I as soon as they came in the mail, I threw them away. Hopefully that's not illegal. But right, it is why would you send an 18-year-old college freshman discover a credit card application or whatever, right? And so, but it happens. And oftentimes, these young adults think that they can, or even older adults, more seasoned adults think that, oh yeah, it's a credit card, it's free money, we're just going to swipe. And then lo and behold, the bill's due and they don't have an income or a means in which to pay it. And so then things spiral from there. So while in the employment world, in corporate America, many employers have stopped asking for it, there's so many other life things that you need to have a good credit score for. That, it's just, again, I'm grateful and thankful that you're having this session, because I think people underestimate, or maybe they just don't know. Maybe underestimate isn't the right word. Maybe they just don't know. And it's about information and education. Right,
and I think in anybody's job, what happens is we know our job. We know what we need to do. We've got experience, whether, we've been there a year, 5 years, we have some sort of background information. The general public doesn't know. That's our job to let the public know what would be to their benefit.
Exactly.
I mean, I found that a lot in my profession. And in other things that I do on different boards, it's like, oh, I didn't notice or that. I'm like, well, I guess I should have told you, because I knew, you take things for granted, you don't realize. But back to the employment too, which also kind of circles back into the credit in general, is that there are lapses, like you said, people life happens. You do things that you wouldn't have done, now. There could be medical bills really do not wait. The insurance companies right away will stick up bankruptcy or a judgment or something on you. And you don't have a lot of control, or you're waiting for that insurance company to make payments. Something that was, a life issue that you didn't have control for, once again. So that will mess up the credit. If there was a divorce and there's one person on one end and one on the other, and they thought each other were going to pay for it, and somebody's name was on this, but the other person charged, that will make a big mess with somebody's credit. Student loans and things of that nature too. There could be a death. Somebody passed away and you just happen to be a joint owner on it or a signer on something, and you didn't realize what you signed because you were trying to help somebody. You could be liable for credit. If you're a co-signer or a co-borrower, generally nowadays they don't really have co-signers, they'll have a co-borrower, because then you legally are responsible. The co-signer is just there as a backup if they exhaust all efforts to get it from the first person. So, and those aren't explained to you, which is really tough. So there are all kinds of reasons why something may not appear to be, in a positive light, if you will. But as long as someone explains it to you, or says, this is what I tried to do, once again, back to going back and checking to make sure those things are corrected, filing a report or a claim to say, look, this is wrong. Here's the right information for that. I know, once again, like you said, Angie, working in a financial institution, credit's very important. They want to make sure that you're able to handle things, especially if it's your job to coach somebody. You want to make sure that you're making good decisions, but there are instances that can be explained that don't completely keep you out of the picture if your credit score is way down low. So remember, there's always hope. There's always a way.
I think many people, and I'm not sure if it was Cynthia or Diane who said, it's free, pull your credit report, right? Just so that you at least know what you're up against. In some cases, people are pleasantly surprised. In other cases, they're not so much, right? It's like, oh my gosh, where did this come from? But knowledge is power. So pull that credit report so that you know what you're up against. And oftentimes, and hopefully I'm not getting ahead of you here, Tanya, but there's a situation where people don't have credit, right? So, they're coming out of college and they have an established credit. And so what I'm finding is that no credit is almost as bad as bad credit.
Mm-hmm.
And so, figuring out how to establish credit in a positive way is also, and I don't know if that's something that you wanted to chat about today or not, but.
Absolutely. I think we need to think about that. Establishing credit is very important for young people or people who have never had to take out credit if they, stay at home parents. And so the other person primarily has a lot of the things in their name, which sometimes happens when, someone's been married for a long time. And again, they've been a stay at home parent, or, when they're married, everything was already in that person's name. Now they have to start, figuring out how to establish credit. So at any age. So I think, if there's some good takeaways, I say let's, kind of share them, because we want people to understand the right way to establish credit. We've talked about how to kind of protect it, looking at your credit report, and also by locking your credit report and paying attention to who has a name close to yours and what they're doing out there in the world. But how do we establish good credit? I think is a good place for us to kind of segue to. So.
Yeah, and Diane, I don't want to put you on the spot, but I know that there are certain banks and credit unions, right, that allow, where it's like kind of a how to establish your credit card. If that's, I don't know, that's not what it's called, but right.
Yes,
where
there actually are credit cards for first-time borrowers, if you will, and a lot of them will have like a $300 limit or something. And this actually will come through your bank, not necessarily I don't want to say names, but a general card that you get information in the mail from, like you do for students that just come all the time. You want to work with somebody you know, because a lot of times too, some of those institutions will have a credit card that's backed by your savings account.
Mhm.
Just in case. It's an old fashioned way to do it. But some of the smaller banks in the communities, not your larger ones, will still have that opportunity that they will give you a credit card and it's backed by a savings account that's got money put away by the side. One thing too that I know that I try to remember is there are a lot of institutions or people that you borrow from that don't report. You need to ask them, are you going to report this to the credit bureau because I'm trying to establish credit? Not because it's going to be bad, but I'm trying to establish credit. So are you going to be able to report this? You know, sometimes the people that you go buy furniture from, they may or may not, but they're always quick to give you a loan and you just want to make sure that it's reported. That's really important. Certainly, like Tanya said, in some days and ages, depending on the family dynamic, one person may have credit, the other may not. Add on to that one, to the person that does have credit, you actually end up getting the same history as the person that's had it for 7 or 8 years, believe it or not, even though you just got added on that card. As a joint owner though, so you're responsible for the money that goes with that. So that's really important. A big deal now is the utilities. I've got to say, in all honesty, you know, your Mediacons and your water companies, your power bills, not necessarily Village Ranch, they're kind of small on that. But some of the other larger power companies, they have you put a deposit down for a reason. And so having that deposit and making those payments can also give you a little bit of credit. Now, once again, that's not credit card payment, that's not an automobile loan, and it's certainly not a home loan, which is kind of like the mother lode, if you will, of credit to have all of them. But those are things to look at.
Yeah, I mean, you got to start somewhere, right?
Yes, ma'am.
Yeah, and hopefully it's a positive.
Yeah, and they're also like some banks have second chance banking. I've worked with a number of clients who, you know, are getting out of some of the situations, like we said, a divorce or domestic violence relationship, and needing to establish some things, but they have made not always the best choice given the crisis in their life. And so there are some institutions that have second chance banking to allow people to start really small and you know, and work their way up to where they can, you know, have a checking account that has a little bit more perks and a little bit more freedom. But there are a few in each community that will allow for that second chance.
And if you've had a problem, try to pay it off. Once again, you need to follow up to make sure that it's reported that it's paid off, because they're not always going to do it automatically. And it could take a while to get it showed as paid, but you know, showing that you went back and were responsible to pay the bill that you owe speaks volumes. If you have a bank or a financial institution, credit union, savings and loan, whatever you have that you work with, and they know you have somebody you personally talk to, they're going to take a chance on you. They're going to go ahead and do that for you. They know your situation. I can't tell you how many people that I've made loans to that the credit wasn't the greatest, but I knew who they were, I knew the situation, and I knew they would make the payment. If I didn't, I just make a phone call. Hey, you know what, John Doe, you forgot to come into the bank this week. Oh, that's right, I'll be right there. So it's an honest mistake. But if you have an established relationship with somebody that is going to be making loans with you or loans you have gotten from in the past, they're a lot easier to work with if you have a bump in the road.
So how often do they, the credit bureaus report, or how often is your credit updated? Does it matter? Does it have like a routine or anything?
Generally, sorry, I feel like I'm taking over this conversation.
No, you're fine.
I'm on a roll, girls. I'm on a roll. I haven't even had a beverage either. So just ice water. Honestly, about every 45 days, because your payments are generally every 21 to 30 days. So every 45 days. But the other thing is, if you get something new, that will go to the credit bureau as soon as that financial institution sends their report. So it could be next week, it could be today. If you're pulling credit today, it's going to show that you pulled credit, because they don't want you going to 6 places looking for money and getting 6 loans that you probably can or cannot pay back.
Okay.
So that
And-
part is instantaneous.
You know, that's a good point, Diane, because that's one of the things that will hurt your credit score really quickly that a lot of people don't understand. When you have a creditor pull your credit report for anything, a credit card, a car loan, whatever, particularly those big purchases, the car loans, the home loans, the credit bureau gives you a little bit of grace there, and they expect that maybe you're going to be smart and you're going to shop around, and you might have 2 or 3 different creditors pull your credit report, all in an effort to get the best deal on that one particular item, the car or the house, whatever. You might have multiple reports there. However, if you go out and have a lot of different creditors from a variety of different credit offering organizations, a bank, credit cards, too many credit reports being pulled in a short period of time is a red flag to the credit bureau, and that will hurt your credit score as well. So if you are trying to diversify your credit, slow and steady wins the race. You know, get one card, get one credit account. Sorry, my dogs are playing with a ball in the background. I don't know if you can hear it. Get one account, pay it off, establish your credit history, give it 6 months, give it a year, then diversify and maybe get a car loan or whatever. Don't try to do it all at once. Just slow and steady, build up time and show that you're going to be responsible, and your credit score will go up over time.
We have a question, or please explain statement date, closing date, due date on the credit card statement. It doesn't, I mean, Diane, if you know, great.
I was gonna say, I think that's probably
I
Diane.
think that's Diane. Go, Diane, go.
Geez, we're gonna get into those federal programs, Angie. I know we are. Basically, the statement date is the date that let's say we're at I don't know, Target, okay? Let's say we're at Target or Walmart. That is the day that they say, okay, I'm gonna pull this information as of today, and I'm gonna make a printout, or whether it's electronic or paper, and say, this is my statement date, okay? The closing date can also be the same as the statement date, or it could be the night before. It depends on their processing. Different companies process either in-house or they have it done for them. And if they send it out, then that could have a different cutoff date or closing date. The due date is the date that the payment is owed. And generally that payment is owed means in their hands, not when you send the check, not when you have it postmarked, in their hands. So you're always going to want to put it out there a few days early, or nowadays, such a blessing, online payments. Usually they process in 24, 48, 72 hours. I would definitely at least give it 48 hours, just because somebody's Wi-Fi might be up or down or something of that nature. You can have them automatically put together on many of your financial institution auto pay type things. It just depends on what your financial institution or where you're paying your money from, what they have to offer. But once again, if you're going to use snail mail, make sure you give it 5 to 7 days. It could get there in 2, but you don't want to take a chance of getting a late payment, because they're not as gracious at refunding late fees, especially if you've had one in the last year. Even if it wasn't your fault or an accident, they tend to say, well, we've already given you one, we're not going to give another. So don't count on the mail to do that for you unless you're going to go ahead and do it earlier. So hopefully that explains that a little bit different. Federal programs, I just meant that USDA and the things that probably Angie works with, they probably have different parameters that they look at when they do their lending and things of that nature. That's all I meant by that.
Well, we are about 15 minutes from ending the call. I don't know if there are any questions that our guests want to put in the chat. And so, if there are last minute takeaways from each of you, please feel free to just kind of, share your thoughts.
I found just in doing some research that there are different programs that are available for people who are trying to learn more about their credit. I'm a little biased because one's through the company that I work for called Credit Smart. And there's also, for those who are aspiring to purchase their first home, Home for USA is another agency that we work with. But, there are a lot of free programs that are out there for people to, again, knowledge is power. So if you're just trying to understand what, answer a lot of the questions that we've been able to answer for individuals here, the great Google or the worldwide, whatever it's called, right? So there's good information out there. So people shouldn't be afraid to go out and do a little searching and digging around as well. There's good programs.
And I will just say that when you're looking at the web or Google, don't go always for the ad of just random companies. Like, your company, Angie, is just giving the information. And so there isn't really an expectation. But there are some companies out there that will expect you have to pay for it. And some of this knowledge is absolutely free. So you shouldn't always have to pay for the basic knowledge. But usually those first couple of ads say, or links say ad. And so you want to move beyond those. Just something, we like the web, but we also know the web can be very biased to kind of skew you to a deal or a high interest credit card if you, do X, Y, and Z. So that's just our caveat for us in Google.
I agree. Be careful.
Always good to remember that, organizations like banks, like Freddie Mac, like FICO, like the major credit bureaus, they all fall under government scrutiny. And so they have to honor Fair Reporting Acts. They have to honor ethical lending practices, ethical reporting practices. And so if you want to learn more, almost all of those types of institutions offer programs to learn about your credit and to learn about credit and wise credit usage. So to me, those organizations are the first places to go to understand your credit, because they are required to be honest and forthright and transparent about how they build scores and how they report scores. Also, if you also know that if you ever have your credit pulled, that creditor is required now by law to provide you with a copy of your score and how that score was obtained. So, and that is all towards, not denying credit to people or not denying credit to people who don't know their credit score or having a bad credit score and they were not aware. So always make sure that you get that, or that is mailed to you, because sometimes it comes a few days later. And then finally, I was going to say that one of the reasons good credit scores matter is because, to Diane's point, if you have a bad credit score, your interest rate is higher. And so it may seem like, and I for years I was in the No Credit Card Club, and I was a very proud member of the No Credit Card Club. But what happened is it hurt my credit score because I lacked diversity in my credit, and it hurt my credit score. And that meant that things like home loans and car loans, I had a higher interest rate. I was in the end paying more for cars and homes because I would not get a credit card. And that was just because I didn't want to deal with it. I didn't need it. I like to live on cash. And though that sounds great, it does cost you more in the long run. So goes back to education, knowing your credit score, knowing how your credit score is built up and how you can cultivate a good one.
If I could just actually ask the question, we don't mean diversity like JCPenney, Macy's,
No, those
yeah.
are revolving accounts. Those, so the diversity comes in the different types. That's funny though. Because now I'm all about that. I have diversity because I've got them all from everywhere. Yeah, so it's the type of account. It's the revolving account versus a long-term installment account like a mortgage, a shorter term installment account like a car loan. Diversity comes in those utilities now. Honestly, I used to work for a cell phone company, and cell phone companies are one of the best ways to begin building that credit score. So having credit from a variety of different creditors and a solid payment history with all of your creditors is really critical.
Thank you.
And that's awesome, because what happens too when you get older, you would hope that you have those things kind of paid down or off. And so you're not using your credit limits. Guess what? That hurts your score too. Even when you've worked so hard to do that, which is crazy. But if I can go back to the fair lending, the reports are made. Every institution that makes a loan of any kind has to report who they made their loan to, how much was it for, where they lived, different things like that. Everybody has not just a legal, but a moral responsibility to do what's right for the person in front of them, no matter who that person is, where they come from, or what's going on. I mean, you just have to be very, very fair. I think that's very important. It's really important to all of us to have a fair chance to getting credit, no matter how we got started or where we end up in the whole deal. One of the things that I want to hit on again, especially for people that are starting out or people in the middle of a serious struggle or even just a little bump in the road, establish a relationship with that person that's going to help you get yourself back on track. Whether they're helping you create a budget, whether they put their checkbook in the desk and you have to come and see them so you don't overspend, or say, I'm only going to have this debit card work if there's money in the account. If there's no money in the account, don't do it. A lot of institutions will automatically pay out money, and then you're paying fines and fees, $30, $35, $40 a clip. You don't have that kind of money. That's a payment on an installment loan for a credit card or something like that. So one thing that's very important is to establish a relationship of somebody or someone that has a financial prowess to be able to help you get on track or get you the items that you need or want to make your life better. That's kind of a simple way to put it, but you got to work with somebody. You just can't do it by yourself, and don't think you're the only one like that, because you're not. There's a lot of people in the world. I needed help when I got started too. So even though you work in a bank, you still have to go through the same thing. And you sit down there and you fill out an application, go, oh my gosh, they want all kinds of information. I might as well just prick my finger and put my blood on it. But they'll help you fill it out. They'll help you take care of it. And then you'll have a great friend too. You're in a community of people, you have a great friend to talk about stuff.
Well, I don't see any questions. I think there was just a comment that Cindy that you responded to about the new FICO actually has just released a FICO 12 score in the last few months. So just something for us to be aware of that, I think we've gone from just thinking there are like 3 major scores that we have to, be mindful of, to understanding that diversity in our credit is really important. And that jobs look at our credit worthiness in a different way, not necessarily of how good or how bad our credit is, but just our level of responsibility around the way that we work with our own budget and money. And so I think this has been a really good conversation, because I think the more we know as adults, young adults, older adults, however we classify ourselves, we're able to help young people make better decisions. Doesn't mean that they're gonna always listen the very first time, but if we are more knowledgeable ourselves, we can plant the seeds that eventually get watered by other people also saying the same information. So I really appreciated you guys coming on and being for our second Money Moves conversation. You don't have any other things? I'm gonna give you guys back 7 minutes.
Thank you for the opportunity. Cynthia, Diane, it's a pleasure meeting you ladies as well.
You too, ma'am. Thanks. Everybody have a good evening. Thank you.
Thank you.
Nice to meet you too.
Take care. And I'm gonna stop recording. Where am I?